the market session today. Do you think we actually held up quite well considering the losses that we've been seeing around the rest of the region? The Shanghai Composite in particular down about 2.5% at one stage today.
Yeah, the market did hold up fairly well. It did actually drop significantly on the closing match this afternoon to finish near the lows of the day. But yeah, I mean, around the region, it was all the markets were all lower, including heavy falls on the Chinese market. But it was a bit of a choppy session here on the market today. Did try to push into positive territory a couple of times, but just failed there. I don't think we can really expect a particularly strong day ahead of a 4-day weekend. Also, a day being the last day of the quarter in terms of trading days. And actually in the market today, we saw some significantly large volumes. Usually the day before breaks, you see pretty quiet volumes, but we both had the options expiry yesterday and the end of quarter today. So we actually saw over $7 billion traded over the market today. But if we have a look, I think there was a bit of a reversal in fortunes on the market today. The miners opened very strongly up this morning, up over 1%, a few good performers, but they really pulled back significantly during the day, and I'll probably put that down to the performance of the Shanghai Composite and the Chinese market. If we actually have a look at a chart of the Chinese market, it's actually pulled back to quite a significant technical level, around that 2240 mark. It's held support there a couple of times, and actually if you expand that chart back to a longer term, you'll see it's found support around that level in the past as well. So today on the market, I think it was mentioned earlier today, you might see a few sneaky company announcements trying to sort of fly under the radar before a bit of a break on the market. And we did actually see that happen. We saw Troy Resources come out and put out a bid for Azimuth Resources. Now, Troy Resources shares ended very strongly negative today, while Azimuth rose about 40%. But interestingly, still significantly below the offer price, still around 20% below what Troy's offering today. And we also saw Newcrest today come out with another production cut to its full year production guidance. Those shares also smashed on the market today, down around 8%, so heavy falls there. Now the key tonight obviously will be the banks in Cyprus reopening again, so interesting day on the market. Not surprising to see that sell-off given we have a few risks coming from Europe over the weekend.
Yes, look, it is the end of the month and the end of the quarter, Tim, so apart from today's winners and losers, can you talk us through some of the most, I guess, standout sectors over the first 3 months of this year?
Look, it's actually been a very good quarter for the Australian market. Given we've just seen around a 3% correction, it could have been even better. But you look across the market and we've performed, it's been a bit of a mixed performance compared to our global peers, for example. We've underperformed the US market. So if you look at the S&P 500, the Dow Jones index is over this past quarter. The Aussie market's up around 6.6%, the S&P 500 11.5%, the Dow Jones 12.5%, so underperforming the US market there. But if we look around the region, it's been pretty good compared to our Asian peers. Japan's been the standout, it's up around 20% over the past quarter. But if you look at the Chinese composite, only around 3%, Hong Kong's Hang Seng has been flat on quarter, so a good performance compared to around the region. If we look down into the sectors within the Australian market, the big outperformer's been the consumer discretionary sector, which is up around 16.5% on quarter, and that's really been driven by the retailers and the sort of traditional retailers, I suppose. DJ's is up around 23%, Harvey Norman and JB Hi-Fi are up over 40% over the past quarter. And I think the driver of this has been first half sales results that have shown sales trends that just have been a bit better than what the market had been pricing in, because some of these shares had been sold off very, very heavily over the past few months. But if we look down the other sectors, financials, IT, also performing well over the quarter. On the other end of the scale, I suppose, not surprising, the materials sector, the big underperformer. It lost around 9% over the quarter, and it's a really big underperformer because if you look at the next worst performing sector on the market, it was the utilities, and that managed to gain a 3%, so about a 12% difference between materials and the next worst sector. And it was really broad-based losses across the materials, the heavyweight stocks, the mid-cap gold miners, mid-cap copper miners, all seeing heavy falls. BHP, Fortescue down 12%. If you look in the mid-cap space, mid-cap copper producer Panos off around 27%. And the reason for this is we've seen lower commodity prices. Copper, gold, iron ore have all come down over the past quarter. There's been some concerns in China about tightening measures being brought in, so that's really hit our commodities space. But I think investors can enjoy this last quarter. Obviously, it's been good, and I think the way the market has run recently, we could be in for a little bit of a period of consolidation, so a strong quarter.
In the end, and they only came out with that downgrade sort of around 2 p.m, 2:30 p.m. today, and it's only a month after their original guidance, which they seem to be on track with that gold production guidance, and then a month later coming out and with a guidance that's 10% below that original forecast.
Yeah, that's right. Newcrest never fails to disappoint. On the market today, shares down around 8% on another downgrade, as you mentioned, 10% lower now, full year guidance. They're guiding between, I think it was 2 million to 2.15 million ounces now for the full year 2013. And Newcrest, I mean, they've just had an endless run of production issues around their mines in the Pacific. The specific announcement today, they're going to be doing some repair work on their Lihir mine in Papua New Guinea, which is a significant project they have there. That particular mine is actually already running at a lower scale at the moment. This is going to take 5 to 7 weeks. While at their Gozawong, I think that's how you pronounce it, mine over in Indonesia, they've been having some issues with their ore grades. There are lower ore grades than expected, so that's hitting production as well. And Newcrest, I mean, it has underperformed significantly, as all gold stocks have over the past year or so, and it's really underperformed the price of gold as well. And I think there's a number of reasons why our gold stocks continue to underperform even just the price of gold. And many of them are having production issues. They're seeing significant cost inflation, and the high Aussie dollar is not helping them either. So if we actually have a look at a Newcrest chart against the price of gold here, you can see the price of gold is this black line here. Newcrest, this is a 5-year chart. So over the past 2 years, you can see the significant underperformance of Newcrest's share price there. And today was a bit disappointing because Newcrest, if we have a look at a 2-year chart of Newcrest, it had been looking to form a base around $21, $21.50, touching there a few times, finding support, but it really ploughed through that level today, falling 8%. So in terms of gold stocks, I don't really like them at the moment. I think material stocks and some of these single producers like gold and copper, there's good contrarian opportunities within them. Yes, the sentiment's bad in gold at the moment, but I think it certainly could get worse, and maybe when it's even worse, then I might be starting to look at buy opportunities within the gold space when they're ridiculously cheap. So a disappointing result from Newcrest today.